Hello and welcome. You tune in to Your Trades with me, Ankita Saxena. It was a good day in the market after the big drawdown that we saw, and especially yesterday after after Black Monday, the bloodbath coming in Monday. We do see good recovery coming, and the markets recouping all those losses. In fact, we have on the Nifty, we have closed above the 22,500 mark. So we traded up more than 1.5% on the Nifty. So good recovery coming in on the Nifty, good 374-point recovery. Also, Nifty Bank was up 1.4%, almost 720 points up on the Nifty Bank. The financials were doing pretty well. In fact, if you look at a couple of financial names on the Nifty, we had Geo Financials, we had Shriram Finance that was doing very well. In fact, the entire PSU basket, the entire PSU banking basket has been doing very well. In fact, even in the market drawdown, banks were really, holding the fort, and especially the PSU names that were doing pretty well. Today also Bank of Maharashtra, PSB, Indian Bank, UCO Bank, they were all trading with gains of almost between 2.5 to 3% gains coming in on all these banks. SBI, IOB, Bank of Baroda, Canara Bank, Union Bank, all of them were trading with gains of 2.5%. So stellar performance coming by the PSBs, if you will. Also on the winning side was Nifty Media, that as a top sectoral gainer, that closed up 4.7% for the day. We also had the mid-caps that were doing pretty well there. That was up 2.5%. And from the mid-cap space, we had BSE that was up in a way 6.8%. There was Policy Bazaar that was up 6%. There was Indus Towers that was trading with gains of 4%. So the mid-cap and the small-cap basket also saw good recovery in today's trading session after the big cuts that came in on the broader market. So broader markets also on the path to recovery. Another mention was the realty pack that was doing very well because, a couple of updates, quarter four updates coming in on the realty developers, whether it is Soba, whether it is Brigade, whether it is Godrej Properties, a good set of updates coming in, quarterly updates coming in for these counters, and that was really powering the entire realty basket there. Macrotech developers 2.5%, Brigade was up 4%, and so was Soba actually trading with gains of 4%. So the entire realty basket was doing very well. Besides that, a couple of other news headlines that was on top of today's news was that the European Union has proposed a 25% retaliatory tariff on the US. You also have Titan that was shining bright in trade on the back of that quarter four updates. So of course, yes, Titan was another name that was holding on to very strong gains today. Very, very healthy set of quarter four numbers and very bullish brokerage note calls coming in on Titan. So besides realty, Titan was also shining away in trade. But besides that, besides the European tariffs, retaliatory tariffs, we also have the very important MPC meet that is going to happen in this week, and we are expecting a 25 basis rate cut come this MPC meet. So that's the top headline, and that's how the market largely shaped up. A day of recovery coming in. All the sectors were in the green. Good recovery coming in the broader markets, and that's how the market shaped up. But to tell you what, Vikas Jain, who's now the head of research in Reliance Securities, is joining us to weigh in on how the market shaped up. Hi, Vikas. Thank you so much for taking the time out and joining us today. Vikas, what a rebound coming in today's trading session. In fact, we have managed to cross the 22,500 on the Nifty. Do you really think that the worst is over now? Have we bottomed out? Is the news of the tariff been priced in, and now we are ready to move up? And if yes, then what are the levels that you're watching out for?
So whatever news flow has been coming through over the last few days, and we have witnessed good amount of recovery in the second half of session from yesterday's trade. So we withhold this supports area of those 21,800, 21,900 levels. We're making a double bottom near to for the mid cap and the small cap indices, and witness a good amount of recovery. So if any fresh set of news flow doesn't come in respect to tariffs or trade barriers, which is expected to be implemented from tomorrow, then we would assume that the bottoms are in place because a double bottom confirms a strong amount of up move. So from here on, the Nifty support area would now move towards the yesterday's close, that is 21,100, 150 to 22,200, which is a gap area, and we remain constructive and positive. On the higher side, the first bout of resistance would be 22,800 to 23,050 odd, and then simultaneously near to 23,500, which is the monthly close for the March month. So we remain positive with 22,100, 22,200 as a straight stop loss.
All right, so those are the levels to watch out for then, Vikas. But do tell us what are your picks, what are you betting on in this market?
So if you look at, we have seen good amount of strong up moves. So the consumer sector continues to still witness strong amount of outperformance. We discussed Britannia Industries last week. We believe now from the another consumer pair, Colgate looks pretty attractive. The stock has made a strong vertical bottom structure near to those 2250, 2350 odd levels and witnessing strong amount of up move. So we believe Colgate could see strong amount of outperformance and the stock could head high further to 2650. So we will do recommend Colgate to buy at 20 with a stop of around 2350 and a target of 2650. And the second stock we like is from the financial services basket, SBI Life. The stock has made inverted structure pattern on the daily charts, and we believe the stock could see some amount of strong up move. Strong build-ups have been seen into the name, and the stock has bounced from its multiple support. So SBI Life looks attractive with a stop of around 1410 and a target of 1580.
All right, so those were the buy calls coming in from Vikas. Thank you so much, Vikas, for joining us today. We will let you go on that note. But moving on then to the word from the wise, Prashant Jain, the Chief Investment Officer, 3P Investment Managers, believe that India will continue to grow at 6% and corporate earnings should grow at 10 to 12%. Let's go across and listen into his view.
But over next few weeks, I would expect even foreign flows should outflows should moderate sharply. Who knows? They may even become buyers. I think everyone knows that India is the world's one of the fastest growing economies. Our fundamentals have not been impacted. Our relative competitive position is improved. The fall in oil prices is clearly going to benefit us. And above all, I think the valuations have turned a lot more reasonable. India's Nifty is now trading close to 17 times calendar 26 earnings, which is reasonable even for a 10 to 12% earnings growth, which I feel is a realistic estimate. So I am constructive on large caps. However, our return expectations have to be realistic. I think 12 odd percent is a reasonable return for Nifty over 2 3 year period on a compounding basis. Small mid caps, I would still be extremely cautious. But what I am comfortable saying is if you invest in large caps predominantly or large cap oriented strategies over 3 years, I think low double digit returns are very realistic to expect. And the right way to invest in these markets would be to phase out your investments over next few weeks or 1 or 2 months.
All right, moving on then. No comments coming in on the market turmoil. That's the word coming in from NSE and NSE MD and CEO Ashish Chauhan, who says that India is performing better than the global peers, supported by tough regulations. Let's go across and listen in.
India has done remarkably well.
Yeah.
Yesterday also when Hong Kong went down by 13%, India was down 3.5%.
Yeah, why?
It's because India has its own growth momentum. Even this year, that is the financial year started April 1, we are going to grow at somewhere between 6.5–7%. It's going to be the fastest growing large economy in the world. And large portion of India's growth is from within.
Yeah.
And that's where there are a lot of bridges and ports and airports and roads and everything is getting constructed. That's the infrastructure push by the government.
Yeah.
But also many more industries are being set up. In fact, in the new world order that is taking shape, India is going to play a very significant role going forward. And that's where, again, many more people will come. The other part is also interesting that most of wealth, if it is going to be exponential, it doesn't require a lot of capital to be invested. It requires some amount of capital, but a lot of brains, a lot of exposure, and a lot larger markets, right? And Indians are now coming faster to the listing space.
All right, moving on to the bright spot in today's trading session, and that's Titan, which was in spotlight after it reported a good set of Q4 updates. So let's go across to my colleague Snehi, who's standing by to get you all the updates of the Q4 business operations. Over to you, Snehi.
Well, absolutely. So good set of Q4 updates coming in from Titan, and especially if you compare it with Q3, very good set of numbers coming in. On a standalone basis, the growth in the quarter has been 25% year-on-year, and overall FY25 growth for the standalone business has been 21% on a year-on-year basis. In quarter 4, Titan has added 55 stores, which brings their total store to 2,989. Let's talk about the jewelry segment now. Overall growth has been logged in at 25% on a year-on-year basis, and good growth coming in from the jewelry business this time. Growth has been led by gold jewelry as well as gold coins, and elevated gold coins have led to sluggish consumer demand at lower price points, but that's not the case at higher price points because they have seen double-digit growth when it comes to higher ticket sales. So that is looking good when it comes to jewelry sales. Studded jewelry has registered low double-digit value growth. Solitaire segment has flipped around. Remember, in quarter 3 this was lagging behind, but quarter 4 numbers for solitaire is looking very good. They witnessed a turnaround with growth in both buyer base as well as value. Overall like-to-like sales for jewelry has grown at 15% year on year. Tanishq has added new stores in Sharjah, Atlanta and Seattle, and 16 new additions when it comes to store additions when it comes to the jewelry segment. Watches, let's talk about watches. Overall growth has been 22% year on year. Titan, Fast Track, Sonata, they've all done very well. Growth of 18% year on year. Helios, Titan World and Fast Track have also seen healthy double-digit growth. Eye care overall growth has been 19%. Healthy double-digit growth coming in for the for Titan Eye Plus as well, especially from its international brands. E-commerce has emerged as the new driver for the sunglasses segment, and Titan Eye Plus numbers are also looking very good. Emerging businesses, when you talk about that, fragrances was up 26%, fashion accessories have done well at 12% growth. Taneira sales continue to be in pressure and they were also down 4% on a year-on-year basis. This is in line with quarter 3. Carrot Lane also overall growth has been of 22%. Healthy growth in studded portfolio has been seen. What brokerages are making of this? Macquarie has maintained outperform with a rating target price of 4,000 rupees per share. Morgan Stanley has maintained overweight with a target price of 3,876, and Citi has maintained a neutral with a target price of 3,550 on the back of Titan's quarter 4 updates.
All right, and all eyes are now on the outcome of the two-day monetary policy, where another 25 basis points rate cut is largely expected. Let's go across to my colleague Gaurav, who's standing by to tell us what is the street expecting. Over to you, Gaurav.
Well, yes. Trump tariff is already causing turbulence in the market, but other than that, specifically in terms of India, we will be watching out on the RBI MPC meetings outcome, because now around 90% of the surveyed economists believe that around 25 basis point of rate cut is what we can see in this meeting as well. With this, RBI's the overall repo rate will go to around 6%, and there are two reasons why economists believe that. First is when we talk about inflation, now they believe that inflation is going to ease down. In fact, the inflation, which was as high as more than 6%, is expected to come as low as around 3.6%, which is the lowest in the last 5 years. Other than that, when we talk about IIP data, we are seeing some kind of slowdown because it is expected to grow at around 3.2% in the month of February. Other than that, what is key thing to watch out for is the RBI stance, because currently RBI holds neutral stance, but some economists believe that RBI will go ahead and change their stance to accommodative, while at the same time others believe that it will be really too early to go to and change the stance. And the reason being that it is currently at a trade war situation when we talk about tariff which are imposed by Mr. Trump, and that is the reason why they believe that RBI will still remain cautious. Other than that, any kind of commentary from RBI in terms of how the growth is going to be is a key thing to watch out for, because at this moment when we talk about India's growth rate, RBI believes that India can grow at a rate of around 6.7% in terms of GDP in FY26. So any kind of change in estimate is something to be watched out for, and any kind of changes in terms of the stance from RBI, and at the same time any kind of changes in terms of the commentary coming up from the global trades which are happening is a key thing to watch out for. But as of now, around 90% economists believe that we will see another rate cut in this meeting of MPC.
All right, another rate cut of 25 basis points expected in this MPC meet. It's a wait and watch. It's something that everyone is watching out for now. But moving on to FY25 GDP, that is likely to have a 30 to 60 basis point downside, according to Pasna Chatra, who's the chief India economist, Morgan Stanley. Let's go across and listen into what she had to say about Morgan Stanley's GDP estimates and the potential tariff impact. Let's go across and listen in.
Our base case has been 6.5% for growth for fiscal 26, but we do see downsides of about 30 to 60 basis points to this number. The direct impact for India in terms of the trade exposure is lower when you look at it versus some of the other Asian economies. Inflation, I think, is sort of a good news for India and a silver lining. Inflation numbers have been better than expected in this year or the last three sort of odd readings that we've got. We do think March would also be below 4%. 4% and probably the next few months as well. Current number for fiscal 26 on inflation is at 4%, averaging with a good part of CY25 sort of remaining below the 4% mark, driven by easing food inflation. So I think inflation by itself does open up the room for RBI to react and respond. If they were not to do that, then real rates would expand. And then in this context of increasing external risks, of course, that has its own adverse impact on the growth trajectory.
All right, moving on then, and let's take stock of what are the stocks that were in focus today, especially in the second half of this trading session. We had GRSE that came out with the notification that they have inked a deal and MOU with Swan Defence and Heavy Industries to boost intelligence and commerce shipbuilding capabilities. So GRSE was a stock that was in focus today. That ended the day, post that it ended up the day at 2.7%. So on the back of that news flow, we also had Info Edge that came out with its Q4 updates, and Info Edge, if you look at the update, the standalone billing was up 19% on a year-on-year basis to 983 crores versus 826 crore rupees. So Info Edge was also in focus today. That was trading with gains of 4.2% on the back of strong quarterly updates. We also had Geo Financial Services that has forayed into digital loan against securities. So, due to this foray into the new business, Geo Financials was also in focus today. That was trading up almost 5% in trade. We also had HUDCO, which had signed an MOU with the Metropolitan Region Development Authority that shall, with MMRDA, that will explore and provide funds of up to almost 1,50,000 crore over a period of 5 years for the development and infrastructure projects to be implemented by MMRDA. And this further, HUDCO will also extend consultancy services and capacity building activities to meet the emerging requirements of MMRDA. So on the back of that, HUDCO was also in focus today. That was trading with gains of almost 6% in trade today. We also had a note coming out on a Jana Small Finance Bank by Nuvama, and they have initiated a buy call on the bank with the target price of 600 rupees, and they expect the ROA of 1.7 to 1.9% in FY26 estimate to FY27 estimate. And on the back of that, Jana Small Finance Bank was also soaring away in trade with gains of 7.8%. So these were the stocks that were in focus today. But moving on, let's go across and listen into Adrian Mowat of Emerging Markets Equity Strategist and what he had to say about the US equity market and where he sees the money flow. Let's go across and listen in.
In an equity market that's still 20 times forward based upon earnings growth of 10% in the United States. And so that doesn't look like a market that is yet priced for recession. So I think the worst is probably not over for US equities. The US, as Trump's very disturbed by, has been running current account deficits for many years, so it's relied on other people's savings. If the US is perceived to be becoming less friendly, economically, general defense policy, etc., then you repatriate capital. So that money can sit in euros, it can sit in Swiss francs. You've already seen it's been sitting in the gold. It can come back into renminbi. It can sit in the yen. The yen's been appreciating quite nicely because normally in these big risk-off moments, the dollar rallies. But I do think we're in a different environment, and that the dollar strength, which has been considerable, because despite what President Trump says, the US economy has been one of the best major performing economies in the world. US exceptionalism, that attracted a lot of capital and drove the dollar higher.
And well, let's go across to top voices that are weighing in on Trump's tariff policy. Sandeep Tandon warns of inflation's coming back, and a NASDAQ that's yet to bottom out. N. Jayakumar sees demand destruction ahead, while Taimur Baig sounds the alarm on stagflation. And Manishi Rai Chaudhary is bracing for weaker US growth. Let's go across and listen in to all of them.
US market has still not bottomed out, and particularly NASDAQ has not bottomed out. So anything related to technology basket, or which is sentiment linked with the US market, should be over 3 years, 5 years perspective. Then trajectory for dollar index is clearly down. I think dollar index either has already peaked out or has potential to peak out in 2025 itself. But if I have to look at from a very near-term perspective, despite that DXY has corrected yesterday, I still believe DXY and global yields, what we have to watch very closely. it has potential to spike from the current level, because when nobody expect that, and that's the time reversal happens.
To the extent that specific sectors have been exempted, it clearly shows the shortages that exist in those products, in those sectors. Whether it's pharmaceuticals or minerals or any of these, the US is in serious short supply. And there could be a lot more damaging impact it could have done had tariffs been imposed on these. At the very least, it could have been disrupted, already is, by the way, for the average US consumer. I think India will be a big beneficiary of money coming back into these markets. And in that, the sectors like pharmaceuticals and to that extent, even IT services will actually stand out.
Probably see, starting with the US, inflation tick up. Already there are signs of producers looking at input and output prices and saying that their input prices are rising and therefore they'll have to push on some prices. Already we're beginning to see some degree of tightness around the immigration measures pushing up home construction prices. Assuming the Fed can do what the Fed wants to do, not what Trump wants them to do, then the Fed is going to be very likely to remain on the sideline, but perhaps start doing significant tapering of quantitative tightening, because in times like this, there is significant additional need for liquidity globally and, of course, in the US.
While these tariffs are a big sentiment dampener as far as the whole world is concerned, as far as India is concerned, I'm more worried about the result season and the consequent earnings estimate downgrade that most of the sectors are likely to suffer. You will see bilateral and multilateral trade agreements within the Asian bloc, maybe, the India-China trade agreements, which have, kind of long been postponed, long been on a back burner. They would actually, possibly improve.
All right, with that, it's curtains down on this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.